Hi everyone. Under the basic accounting terminology theme, today we are going to discuss about the sales. What is sales? Sales is the income which is earned by the business through its core business activities, either by selling the goods or rendering the services. How sales is different from revenue? Revenue includes secondary income as well. For example, interest earned on the loan provided or sale amount received on the sale of assets. So that's the prime difference between sales and the revenue of the organization. Now sales can be on cash basis and it could be on credit basis. When you're selling the goods on cash basis, what will be the accounting entry it will be generated? Cash account debit, because you are receiving cash, and sales account would be credited. And in case of credit sales, what will be accounting entry? You will debit accounts receivables because you are going to receive the money in future, or debtors account would be debited and credit would be the sales account. Sales account is what? It's a nominal account. It comes on the credit side of the income statement. Okay. So now this was the concept regarding sales. And how will you recognize the revenue? Revenue is recognized. Revenue or sale is recognized when on the accrual basis. Whenever you have done your deal, you have entered into a contract and you have done the sales, at that time the revenue would be accounted for, not at the time when the cash would be received. And one very important point about the sales return. So suppose the organization has done the sales. Now due to any reasons, quality reasons or any defects or any reasons, the return has come, the sales return has come back to the organization. It is called sales return and it will be deducted from the gross sales amount. Or some other contra revenue accounts are there, which is nothing but your allowance. If organization gives allowance to the customers, these are all called, or discounts to the customer, these are called contra revenue accounts. And these accounts deduct minus net from the gross sales account. So you are showing your gross sales minus these contra revenue accounts, which are discounts, allowances, sales returns, and then you will show as a net income for the organization. I hope you would understand the concept of sales, revenue, sales return. Do tune into this channel for more understanding on the accounting terminologies. Thank you.